You got tax debt with the IRS. Maybe the IRS has sent you one of those nasty love letters that they like to do. You just want to come clean and get on a payment plan, or at least know your options. Maybe you've tried to call the IRS and had no luck. Well, I'm going to do my best to let you know how I approach tax debt, helping people resolve that and get on a payment plan that is affordable for them. Let's do it. All right, what needs to happen before you get on a payment plan or installment agreement with the IRS? We need to be what they call compliant. What that means is you need to at least have filed the last 6 years of tax returns. So before we get on a payment plan, we need to get those done. If you have not done that, that is step one. If the IRS is hot on your tail, maybe you got a notice of intent to levy your bank account or garnish your wages, and you need time to file your missing returns, you will need to just call the IRS and ask for that time. We generally ask for anywhere from 30 to 60 days, and they should be able to give you that hold on collections to give you time to file your missing returns so then you can get on a payment plan. If you don't know where your records are, W-2s, 1099s, etc., then I highly recommend that you go on the IRS's website and get your wage and income transcripts to prepare those missing tax returns. I got a video on this. Make sure you check it out. Another thing that needs to happen before we get on a payment plan is you got to be caught up on your current taxes. So maybe you owe for 2020, 2021, and now it's 2025. Have you paid your 2025 taxes, your current taxes? You owed for the past. You don't want to continue chasing your tail and owing. So we got to make sure that we are current with our taxes. If you're self-employed, have you paid your quarterlies? If you are employed, are you having the proper withholdings come out of your paycheck? All right, now that we got compliance out of the way, we can't discuss payment plans without discussing what other options you have to resolve your tax debt. We essentially have 4 options here. Number 1 is obviously payment plan, which is what we're going to go over in this video. Number 2 is a settlement options, essentially paying less than what you owe. It's called an IRS offer and compromise. I got one of those videos. Make sure you check it out if you're interested. Third option is what the IRS calls a currently non-collectible status. It doesn't get rid of the debt. It essentially just kicks the can down the road, but the IRS cannot come and collect, can't levy your bank account, garnish your wages. We'll kind of touch on that one on this video. And number 4 is bankruptcy. You can essentially get rid of your tax debt through bankruptcy. It doesn't get rid of all of it. The last 3 years still stand, but it will get rid of anything older than that. The other thing that we have to discuss here in terms of payment plans with the IRS is penalties and interest. If you get on a payment plan, penalties and interest continue to accrue. It's like a credit card. You can pay the minimum payment with a credit card, but if there's still a balance on the credit card, there's interest accruing on it. So it is still in your best interest to get your debt paid off as soon as possible. Currently, the interest rate with the IRS is at 8%, but this does change based on interest rates with the economy. And then there's the failure to pay penalty that continues to accrue. It's 1% a month when you're not on a payment plan, and it's 0.5% a month when you are on a payment plan. All right, now that we got essentially the groundwork out of the way for payment plans, let's discuss your options with the IRS in terms of payment plans, or what they like to call them, installment agreements. There are generally 3 categories that I take into consideration when getting someone set up on a payment plan, and they are all based on the amount that you owe with the IRS. Now, these all have to do when you don't have what we call a revenue officer involved in your case. If you got a revenue officer involved in your case, essentially, this video does not really pertain to you. All right, so the way that I break this up in terms of how I approach payment plans with clients is I break it up into 3 categories. If you owe under $50,000, if you owe anywhere from $50,000 to $250,000, or if you owe over $250,000. So as the debt gets bigger, it essentially becomes harder to get on a payment plan with the IRS. So if we owe under $50,000, the best case scenario is to get set up on what the IRS calls a streamlined installment agreement. This is going online and setting up a payment plan for a direct debit, i.e. they automatically pull the money out of your account every month. This is the cheapest option, and it is the simplest. How they calculate your minimum payment is they take the total debt divided by 72. So if you owe $40,000, divide that by 72, you're looking at somewhere around like $560 a month. Setting up a payment plan like this will avoid having a federal tax lien filed against you. Now, what if you can't make that minimum payment? Then there are two other options that you have. One is calling the IRS and getting on a minimum payment to have the debt paid off by the CSID. And number two is, if you can't afford that one, then it would be to provide financials to the IRS. I go into more detail in the next category on those two options. If you owe anywhere from $50,000 to $250,000 to the IRS, you essentially have three options here. Either you can pay the debt down to get it below $50,000 and then get set up on a streamlined installment agreement, as explained in the prior category. This will avoid having any federal tax lien filed against you. To be able to get this done, the first step is to call the IRS and find out what that amount is to get your debt below $50,000 and what years you need to pay off and how much each year. What you would then do is then go online and make a payment for those amounts that they say per year. I got a video, check it out, on how to make these payments. Once you make the payments, you're gonna have to wait a week or two for the IRS to process these payments, and then you would then go online to get set up on a payment plan. Again, got another video, check it out on how to get set up on a payment plan online. If this seems overwhelming to you and you want our help to resolve your tax debt, please use the link below to schedule a phone call. Option number two, if you owe anywhere from $50,000 to $250,000 to the IRS, is to get on a payment plan, have the minimum payments pay off your tax debt by the CSID. The way you would do this is call the IRS and you would essentially ask them just that. Can I get on a payment plan to have my minimum payments pay off my tax debt by the CSID? So what is CSID? The acronym, CSED, Collection Statute Expiration Date. This is the 10 years the IRS has to collect on your debt. Now, getting on a payment plan this way avoids having to provide financials. A lot of people don't want to give all their stuff to the IRS, i.e. letting them know how much in assets they have, what exactly they have, what is their income, and what are their expenses. It avoids having to do any of that. However, getting on a payment plan like this, the IRS can still file a federal tax lien on you. If you can't afford the minimum payment to have the debt paid off by the CSID and you owe anywhere from $50,000 to $250,000 to the IRS, the third option is to provide financials. What this means is you will need to fill out the form 433F and provide your assets, income, and expenses to the IRS. The IRS can file a federal tax lien if we go down this route. If you want to go down this route, I did just film a video on how to fill out the 433F and everything you need to know about that form. This will essentially set you up for a partial pay installment agreement. Partial pay, i.e. you're not paying the full debt. So this is essentially a settlement option. The other thing it could set you up for is what the IRS calls a currently non-collectible status. And as in the name, they will not collect on you. You're not going to be making any payments. But what you have to know is the debt is still out there and you're essentially kicking the can down the road in this. The other thing you need to know if you're in this situation is the offer and compromise, which may be a more beneficial route for you if you're in this scenario, potentially. I have a video on that. And if that's something you want to explore, I highly recommend checking that video out. If you owe over $250,000 to the IRS, you essentially have two options here. Option number one, get your assessed balance below $250,000 and then get on a payment plan where the minimum payment pays off the debt by the CSID. Now, to get this done, you would have to call the IRS and ask exactly what is that lump sum that you have to pay down to get the debt below $250,000. You may have to pay off several years, so make sure that you do get that information. What years and how much do you owe for each to get it below $250,000? Then you'd have to go online and make that payment per year. Once you make those payments, then you'd have to call the IRS back to get on that payment plan where the minimum payment pays off the debt by the CSED. The second option you have is to provide financials. I just went over this in the previous example, but it's essentially filling out that 433, providing your assets, income, and expenses to get on a payment plan with the IRS. Now, I did just make a video on this 433, so check that out if that's the route you're going to take. So essentially, again, it's only two options. Either you get the debt below 250 and then get on a payment plan then, or you provide your financials. One thing you do have to note, the IRS can file a federal tax lien against you for both of these options here. Another thing you need to know about installment agreements or payment plans with the IRS is defaulting on these installment agreements. Okay, if you get a payment plan set up and then you file the next year of tax returns and there is a balance and you do not pay that balance off by April 15th, then that potentially could put your installment agreement or your payment plan into default and you would have to set up a new one. The other thing is if there are two consecutive payments that you have missed for your payment plan, it will go into default. If that is the case, I would get ahead of this and call the IRS prior to this happening, and potentially they can give you leeway on this. Man, I hope this video was helpful for you. If it was, hit the buttons, like, share, subscribe. Thank you so much, guys.